Good day, folks, and welcome to Best Trade Setup. In this video, I'm going to take you through the remaining days of the week, which is the last week of 2023, where we have trades from the 27th all the way to the 29th. On the 27th, we have Euro USD, and the reason why I took this trade, I'll explain it in a few slides. I'll just show you the before and after. This is the 15-minute time frame. This is the 5-minute time frame. Now here I'm showing you how the close above the EMA confirmed the further move up, and there we have price finally reaching take profit. Then I entered another trade to the upside. Mind you, I will explain in the following slides why I took this trade. Now, disclaimer here is that the way I trade is a combination of things that I've learned throughout the years. I am not claiming to be a guru or a master or the know-it-all of trading. But what I can say is that I found something that works for me, and it's a combination of so many things that I've learned throughout the years. For example, the order block. Some of you who do ICT will notice that I don't have a fair value gap in here or an imbalance because I don't consider those things in my trading strategy. I just took what made sense to me and I rolled with it. At the end of the day, no two traders trade the same. So it's very important to remember this fact, and that just because I do things differently doesn't mean that I'm less likely to be successful or more successful than the next trader. It just means that I found something that works for me and I'm rolling with it. At the end of the day, it's about being a consistently profitable trader. So from these videos, I'm just sharing what I see in the markets and my trades, the ups and the downs, and the challenges that I face. So from these videos, I hope you folks take something that you can use in your strategy. If not, that's still fine. Here we have price reaching take profit. Now this is the 15-minute time frame, and here is where I took the buys on the 5-minute. This is a wider view of price action on the 15-minute time frame. Now here's the 5-minute time frame. I'm going to break down what led to me taking those two buys. These vertical blue lines here show a confirmation of buys, and moving forward, I'm going to look at the price action in a bullish manner until I see concrete evidence confirmation that price action is now showing a bearish bias. So here the reason why I said buys was because we have a fake out where price goes here and here and here and back again. With every fake out is a W pattern or an M pattern, and it so happens that this fake out is in the form of a W pattern. Also, we have a 3CP, which is a 3-candle pattern, which is also known as a morning star or evening star pattern. We have that on the first leg. Here it is, 1, 2, 3, 4. And then we have a pin hammer right after the 3-candle pattern. Every time there's a pin hammer after a 3CP has completed, we take that as a confirmation of itself, that pin hammer, that just one pin hammer. In any other situations, I need to see 2 pin hammers for them to equal one confirmation. Mind you, like I said, this is how I trade, this is what makes sense to me, and has proven to be profitable in the long run. And then we have the second leg right here showing a 3CP formed by 4 candles. 3-candle pattern can be formed by 4 candles or 3 candles. I do have a video earlier on showing you what 3-candle patterns are, what determines a break of structure for me when I look at the charts, what determines a order block for me when I look at the charts. So please refer to that video, because just to make this video quick and simple, I'll just go through these price action movements and the things that I look at to make a trade. So here we have price closing above the 20 EMA. Now I need 6 confirmations formed by the candle pattern, and then to really show me to enter a trade, I need a close above the 20 EMA. If I don't have that close above the 20 EMA, though I may have the candles lining up, I won't take that trade. So moving forward, we are in a bullish bias. Here where I took the trade, we have this 5-minute order block. So we have a break and retest. We have price action doing a break and retest at this break of structure level. As you can see, price comes and taps it here, so it's a break and retest. Break and retest for me happen at significant highs and lows points like the break of structure. Those are the places that I look at for my break and retest. So we have one, and then we have price forming a sweep at this level right here, formed by this low all the way here. A sweep and pattern, or a W pattern in this case, where we have price going here, going up, and then back here. So with every sweep or fake out is an M pattern or W pattern. And then we have one, two, three, four candles forming a 3CP. Now a 3CP, when you add those four candles, it should form a pin hammer. So you just have to see where price starts here and closes here. So if you're adding all these four candles, it would mean that price went all the way down here, closed back up here, therefore forming a pin hammer rejecting the lows. And then afterwards, we have two pins in opposite direction. Every time we have a fake out or a sweep and it's followed by these two pins in opposite direction. In this case, we have this one rejecting the upside and the following one rejecting the downside. This is a confirmation by itself. It shows that price will move further up. And indeed it does. And then later on, we have a close above the 20 EMA, which is an additional buy confirmation. You can add another position in here. So now, given the fact that price is already bullish from this point, confirmed by the close above the 20 EMA, it's okay for me to enter this trade even if it doesn't close above the 20 EMA, because we've already gotten that bullish confirmation from earlier on. I just need to see price rejecting off of break of structure levels in a form of a 3CP or an M pattern or W pattern. Those are the things that I look for to confirm further buys. Now we have price going up and then coming back down here. And what we see here is a break and retest at yesterday's high of the day. This is yesterday's high of the day right here. Price goes up, retests it again. So then this is a confirmation followed by 3CP formed by four candles, 1, 2, 3, 4. And we have price acting off of the breaker block. Now, a breaker block for me is what used to be an order block that price did not react off of, but instead went through, came back down into, and then bounced off of it to continue moving up. Because if you look closely here, this is an order block right here, and it's formed by the fact that price broke this point of structure, of which you can see on the 15-minute. My break of structures are determined by the 15-minute time frame. And then we have price rejecting off of a 20 EMA, which further supports a move up. And then that is where I took the second trade for buys on EU. Moving further on, after the New York window closed, we have another opportunity for buys right here, where we see a sweep with a sweep W pattern, and then we have a 3CP plus pin hammer right here, 1, 2, 3, and then we have a pin hammer right there. And then we have price reacting off of this 5-minute order block and then a close above the 20 EMA. So buys in this area are valid and we can take them to this high. Now, this is a closer look as to what I was talking about earlier on, where we have price in this 5-minute order block and then creating a sweep here. Note, with 3CP, the middle candle has to be below the halfway point of the first candle for it to be a valid 3CP. If not, it has to be a pin hammer. But with the 3CP formed by four candles, the combination of the four candles have to form a pin hammer like I mentioned earlier on. These are the buys on the 1 hour time frame right here and right here. Now here we have another EU trade at the end of the day. Now the reason why I entered here instead of here is because I was not at the computer, I wasn't at the charts, I wasn't looking at the charts at the time this formed. Otherwise I would have entered when price closed above this 20 EMA with the stop loss somewhere around this area like you can see right here. But as you can see, price did go beyond this stop loss level, and I have to wait and see if it's a valid buy given the fact that In this case, I hadn't entered right here. When price formed a fake out in the form of a W pattern, I knew that this is a sign for a second chance entry into the trade. When I see a W pattern or a 3CP at the point which marks the stop loss level or the point which would invalidate a trade, I would enter the trade again. And usually when that happens, it gives me a 2RR on the trade, allowing me to recover the first loss, if at all, had I entered here and got stopped out, and also earn an additional 1% if I had risked 1% to begin with. Here's a closer look where price goes below this level and closes back up. As you can see on the line chart, it would be down, up, down, up. Closed some partials right here. And as you can see, price did go up and then eventually reversed. But here are the things that I was looking at to confirm buys on this trade. First, we have a sweep W pattern at this level, 3CP formed by 4 candles at the 5-minute order block area. And then we have a sweep again, W pattern, 3CP formed by 4 candles and also happening at the 5-minute order block. Now, when I have price going back down here and then up, the upside when it's formed by 2 consecutive bull candles followed by 2 consecutive bear candles, at least, I now take each leg and count it separately from the other one, where whatever I see here, I count it up and then I add it up to here as well, I count it up. But if there wasn't this consecutive 2 bull candles, let's say it was just one huge bull candle and then 2 down, I wouldn't have considered this as a sweep W pattern and then another sweep W pattern. I'd have edited it all up as a W pattern, fake out, and the fake out in the form of a W pattern, which would be 3 confirmations. But had I taken it separately, it would have given me 4 confirmations. Be aware of those things. And if this is too much for you, it's okay. Repetition, repetition, repetition. These are the same things that I look at every single week when I look at my charts. And you will see in the following charts as well, the same thing. And then here we have what I was talking about earlier on, where I have the fake out in the form of a W pattern. This confirming buys. And then again, price comes down and gives us another fake out in the form of a W pattern. You could have easily entered the trade here again and then here again. But other than that, all of these things were showing me bullish buys. This is a wider view of price action. As you can see, very bullish during the day. And on the same day, we do have gold, and this is gold before. Re-entered the trade, the second position. Gold eventually reached take profit on both trades. These are the 2 trades that I had taken. Price then continued going all the way up afterwards. It's really important to not really concern yourself with what price does after you've exited the market. You came there, followed your plan, and ate some pips. That's all that matters. Whatever happens afterwards, it's okay. Then I entered a second trade. Price eventually reached take profit. This is the 15-minute time frame. This is where I had taken the buys on the 5-minute time frame. Now, leading up to the buys on gold. So here we have price doing a sweep at yesterday's high of the day and with every sweep and pattern. And now we have price at this level here doing a fake out in the form of an M pattern. So with every fake out is an M pattern, and it just so happens that this is in the form of an M pattern. And then we have 4 hammers. Now, since all these pin hammers are not following or coming after a 3CP, I need 2 pin hammers to equate to 1 confirmation. Whilst if it was after a 3CP, that 1 pin would equate to 1 confirmation. So that means 4 pin hammers. In this case, it's 2 confirmations. And then we have price closing below the 20 EMA. Therefore, here it's a bearish bias. Now we have price going all the way down here. Now, we're still maintaining a bearish bias until we have proof of a bullish bias, and indeed we do see that. We have a fake out W pattern right here. and then a sweep W pattern. We have a 3CP right here and a pin hammer afterwards. Now, since this is a pin hammer after a 3CP, it's only one. It's okay. That is a one confirmation. Unlike when we were looking at them here, where they weren't following a 3CP, so we needed two pin hammers to make one confirmation. So then we have all this price action showing us bullish bias, but we're waiting for price to close above the 20 EMA, and it does. Therefore, we change our bias from bearish to bullish, hence marked by this vertical blue line. I will be maintaining this bullish bias moving forward until otherwise. And now we see that price did a fake out at this level, W pattern, order block area, and a 3CP formed by 4 candles. Because it did a 3CP at a support level, that's enough for me to enter the trade because we're already in a bullish bias. I don't need as many confirmations as I had needed to change my bias from bearish to bullish. In this case, this is supporting bullish bias, and then price came back down from the sweep W pattern at a quarter level within the order block, and this is an engulfment, bullish engulfment candle right here. So this vertical line marks yet another entry position, and then we have price forming a 3CP right here, a fake out W pattern, order block area, so another position added. We're going up, up, up. Stop loss should be below this point right here. Then we have price going up here, breaking structure, and this becomes a 5-minute order block. Price comes back and pins here at the 5-minute order block through the quarter level. And also, if you look closely, 1, 2, 3, 4, these all form a 3CP. I didn't actually label it at the time, but I do see it now. This also further confirms buys. Now, this whole movement is a consolidation. Price does a fake out at this level, and this price pattern here should hint towards a parabolic move moving forward, and indeed price did explode going up. This is a wider view of price action where we can see a peak formation low right here and a consolidation alluding to a possible bullish movement, but we can't just enter it just like that. We need confirmations for bullish movement, as we've seen right here, and also combined with the fact that this is a consolidation fake out, and we have this rising price action right here leading up to a parabolic move. I will show a similar price action pattern showing that price did like a consolidation, rising price action towards a parabolic move. This is the 15-minute time frame. Now, remember the buys we did towards the end of New York session. Here we have a breakout retest, break and retest, quarter level, strong bullish move up. Now, because of this price movement at this level right here, that's why I entered the trade, because already we're in a bullish bias, and this further confirms further moves up. And then you have two pins in opposite direction, like I mentioned earlier on. There's also a confirmation by itself, so even entries after here is totally fine. Here we are, a wider view of gold on the 5-minute. Now, remember I said this is similar to the previous price action on gold, but this is EURUSD on the 5-minute. And as you notice, this is the consolidation. Price did a fake out above the consolidation. Now this is a price pattern, as you can see from the previous gold setup, leading to a parabolic move down. So this is just a bigger picture, but you will always need price action to confirm sells at the end of the day. Now this brings me to the end of part 2 of my weekly analysis of price action. I realize that this video has taken quite a long time, so the next video I'm going to be really quick, and I'm just going to run through it because I believe in this video I've explained what I'm looking at in detail at length, so I don't need to do that again. And if you need further clarification, please refer to my previous videos where I really show you why I consider this a breaker structure, why this is an order block, why this is a BCP, why this is a W pattern, and all of those things. Thank you for listening in, and I'll catch you at part 3, the final part of my weekly analysis, last week of the year 2023. So with that, folks, I'll catch you in the next one. Cheers.